do believe I am recording. Um, I wanted to look at some things real quick. So let's see what we got going here. Yes. And we have to show our ticker. All right. We are kicking it off this morning on September 21st. I'm Susan D. I am your host on the OBD Extra online business development. And we are back here at the pre-market show. It's around 7:30 in the morning. And I do believe that we're having what you would call a dead cat bounce. So before we get started, let's talk about the ticker below. And that's the one that says, this is a disclaimer. I am not a financial advisor. This is not financial advice. Please consult the CFA. When you're trading the markets, they are a risk reward business opportunity, and you can lose money, as we all have in the past and probably will so in the future. If you were in the market yesterday, you probably did lose a couple of coins here and there. Uh, if you didn't take profits, I keep saying take profits where you can at this point and put some cash on the side. Why? We don't know what's going to happen. We have a lot of things going on, and I talked about it yesterday. Now there's this new company, Evergrande, out of China, and I don't even know what their ticker symbol is. Um, so let's see if we can pull up what their ticker symbol is. And I'm going to put you guys on. Let's do this. Oopsie. Let's be diligent and share. So I'm going to go ahead and share my desktop here. There we go. So I want to know there it is, straight out of China. Ooh, you have got to be kidding me. All right, so this is an over the counter market for the US, which means that you can't really. Oh, wait a minute. Did I? I gave you guys the wrong screen. Hold on. Let's go to the right screen. So let's share. Let's share this one. Okay, so I had no idea that the Evergrande Group was an over the counter OTC. There it is, right there, OTC market. This was the big hoopla yesterday. Now, from my understanding, this group owes a lot of money. It's out of China. It's $1 billion, $300 billion debit company. I mean, this company owes a lot of money, and the banks are coming to collect. I believe it's the collection date is next week. However, it was the major news yesterday because from what I know is that in the market, when China goes down, everybody goes down. Why? I don't know. It's that old saying, whoever owns the most gold owns the world. But gold is irrelevant these days. Just by my portfolio, I can tell you gold's irrelevant, right? Um, anyway, so interesting. EG, EGRNF. Let me write that down because I might forget in my old age. RNF. Now, the reason why I kept my TD Ameritrade account is because I can do over the counter markets. I cannot do that in my Tastyworks account, which is probably a good thing because that's where most of my money is in those accounts. But I have my play money or, the money that I want to speculate in my TD Ameritrade. So let's let's go here and type it in. EGRNF. Okay. So there's no information for this, right? Let's pull this up full screen so that you guys can see it better. And as a matter of fact, I'm going to take my brand off here so that you can see everything. How about that? Very good. Perfect. I'll leave the ticker below because that's important for everyone to see. This doesn't tell me much of anything, but it is a property developer. And it says right here the Evergrande Group or the Evergrande Real Estate Group is China's second largest property developer by sales and the 122nd largest group in the world by revenue, according to the 2021 Fortune Global 500. What I know about this company so far is it owes somewhere around $300 billion. They did a lot of investment in a whole lot of different things because they're a real estate company, and that means they did a lot of borrowing. Uh, she doesn't like that. Um, so as it turns out, this is not something that we're going to be looking at. But what I want to do is I want to pick up some news on that and see if I can actually get some information on this particular thing here. Let's go down here. This is 821, 910. That's not what I wanted to do. Let's see if we can click for story. Here we go. Let's give it a try again. EGRNF. This is how I do morning pre-market stuff. And I usually do it through here. Here we go. Yep. This is 2020 news. Interesting. Let's go to the China syndrome. Come on. Here we go. August 17th. Let's see. China Evergrande boss steps down as chairman of its flagship property business. Um, yeah, let me go ahead and see if I can pull the news over here. So, Chinese real estate billionaire Hu Deng has stepped down as the chairman of China's Evergrande Group's flagship property business, months after the unit dropped plans for a multi-billion-dollar listing on the mainland. Uh, n- Now, I think he started his crackdown with Jack Ma of Alibaba. Alibaba is China's Amazon, right? So, along with that, bonds fall after court ruling. Uh, Anything else? Everything else seems to be Alibaba. Ba-dum-bum-bum. So I don't want. I'm gonna make this easy because seriously, this is not something we want to even consider. But this is what's happening. So let's go see what pre-market looks like. But the market opens at 9:30 on the East Coast because we all know that. Um, and we're on the East Coast. And let's see what we're tickering at right now. Having TD Ameritrade, I'm able to stream live CNBC, and I even do believe on their live paper account. Even though the data is like 15 or 20 minutes delayed, you can have a paper trading account where you can learn how to set up trades and kind of, you know, check the market out, do the market thing. So the program is going to resume in a minute. But this is how I kind of work uh my my research. So when somebody throws a stock at me, I'm going to put the symbol in. I'm going to see what this is, what they're telling me here. And these are the different research companies within Thinkorswim that they use. The street is generally Jim Cramer. The research team is TD Ameritrade's research team. Not sure what the CFRA is. Market Edge is that cool uh, place that you go to pay for market information. But if you have Thinkorswim, boom, there you go. So Blackstone, it's not BlackRock, it's Blackstone. But right now they're saying that it's a buy, it's a hold, it's long, it's this, it's that. And if you need more research information, then what you're going to do is you're going to click download, and I am going to just drag it right over here so you can see it. And the prediction of the target price is over here at 169, and right now it is at 123. I'm not saying you should buy Blackstone. I'm just showing you some things. It is A plus. It would be nice to have in my portfolio right now, but at this point, I'm keeping 70% in cash and 30% in the market. So I have my 30% in the market. But you can come down here, you can look at all of the comparisons, the PEs, the recommendations, highlights, um, and then your sector analysis, right? So here's the peer group. It also tells you um, what industry this is in. So securities, commodity contracts, financial investments, and related activities. So it's a bank. I mean, it's a place to borrow. You got T. Rowe Price here. You got the Bank of New York Mellon, State Street Corp. I know them well. Northern Trust Group. I believe they do a lot of insurance stuff. The Carlisle Group. Now, if you know anything about politics and what's going on in Virginia, Youngin was one of the co-founders of the Carlisle Group, and we know that the Bush family was part of the Carlisle Group. Um, anyway, you do have BlackRock in there, which is one of those other financial companies, and basically they um, do a lot of analysis, and they talk about whether a company is going to go up or down, or you should get rid of it, and we should all get rid of BlackRock. But I digress. Um, so anyway, this is great. This is a great way to do some research, but this isn't where I stop at my research. Um, so today is Tuesday, and what I generally do is I go into my mail and I am looking for, maybe it hasn't pushed out yet. Um, Here we got 9 option trade ideas in financials and casinos. Tastyworks and Tastytrade has come out with a new way to find some option trades. It's called Alpha Boost, and it is by the Quiet Foundation. These are free, so you don't have to pay for trade ideas like you do on these other platforms. And this is a new tool, and it's free to anyone. You don't have to be on Tastyworks for it, right? So here you go. These are the sectors or the equities that they're looking at. And then down here, boom, 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 they're giving you trade ideas. Here's Goldman Sachs. They're neutral with Goldman Sachs. We're talking an iron condor, and uh, they're giving you the upside and the downside, the break even points. So obviously, Goldman Sachs has been ranging. Why else would you do an iron condor, right? So let's let's do this. See what we got here for Goldman Sachs, and let's go to the trade page. Um, and they are in the November expiry. So that's here. And just for let's some you guys can barely see this, right? Let me make this bigger. Uh just for kicks and giggles, let's go over and just do this. Let's hit go. Now this is kind of where the software is putting you into what we would call um, the Delta variant, which kind of evens out your deltas so that you're not carrying too much delta or too little delta. Okay. Now what we want to do is we want 350. We want to buy the 355 put. We want to sell the 360 put. So we want to buy. This is the put side because there's the puts. We want to buy the 355. And we want to sell, click and drag the 360. Now on the call side, we want to sell the 430 and we want to buy the 435. So let's go back here. We want to sell the 430, buy the 435. So let's buy the 435 and let's sell the 430. Click and drag, right? And this looks like a 10 or 15 wide iron condor. Pop, probability of profiting the whole $208 of premium on this is about 44%. That's a little below what I like. I like my pop to at least be over 50 or 55%. 60 is better. The probability of making 50% of this trade or $104, which is half of 208, is 66%. On my P50, I kind of like that to be at least over a 72% um, probability of collecting 50% of this trade. However, it's keeping my deltas in check. I am collecting positive theta throughout this trade. I do have plenty of time. It's 59 days. 59 days. And I'm collecting $1.41 of positive theta per day. Now that number can go up or down depending on how the stock is moving. Because this is a defined trade, then I'm definitely my max loss is only going to be $292 if this trade does not go my way. My buying power is pretty much 1-to-1, right? So I'm only effectively using $292 of buying power. So now if I were to review this trade, then of course it's not going to fill until the market's open, but you know, that's an idea. So I come back and say, hey, I kind of like that idea. And they're giving you all of the different. Now the credit, when they did this, obviously the credit was at 177 when they put this chart together, and that could have been yesterday. And we're getting this in our email this morning. But as it stands right now, I'm collecting $208 as a credit for this trade. And basically what I want it to do is I want it to devalue itself. So if I'm getting a credit of $2.08 or $208, I want to buy it back for less than 208. I want to buy it back for 50% of my max profit, which is 104. But in an iron condor, you're probably going to be looking somewhere around 25 to 30% of max profit. Okay, so next one, and this is the last one I'm going to do. Another iron condor. And the reason why we're doing huge wide iron condors and trying to stay neutral in the market is because it is what was the name of that? Kung Fluey? It's Kung Fluey. All right. That's Las Vegas Sands. Now, this is tied to the Chinese market. I don't know if I would even consider this trade, but it has a high IVR of 72%. Let's see what Goldman Sachs was. Yeah, see that IVR is low. That means there's something going on with LVS or Las Vegas Sands, possibly in upcoming earnings. Why did it spike so much, or why is it spiking so much? But anyway, let's take a look. Let's go to LVS, which is Las Vegas Sands. Let's go into, they do. Look at that. They have an earnings coming up. So let's go over here. They have earnings in October. That's October 20th. It carries a dividend. We don't have to worry about that. It's a very liquid stock. Only it's got a lot invested over in the Macau, China, Western connection. Let's just look at what's going on here. We may be, if we put this on, we may be able to take it off before the October earnings report. But it looks like it's going to be another 10-point wide iron condor. So we're going to buy to 31 and sell to 33 on the put side. So let's start here just for kicks and giggles, right? We're going to buy the 31 and we're going to sell the 33. Isn't that what they said? Yeah. And then on the call side, we're going to buy the 45 and sell the 43. So we're going to buy the 45 and sell, click and drag, and sell the 43. It's a neutral iron condor. This actually looks pretty good. But once again, my pop over here is still below 50%. My collecting 50% is, and this is good if you have a small account, right? If you have a small trading account and you want to put these trades on and you don't have a whole bunch of buying power, and this is just one contract. A lot of people, 5, 10 contracts, but we always say trade small, trade often. So you can put this one on, you can put that one on, you can put this one on, you can put that one on, and 50% of $89, you're looking at, 45, 45, you know, dollars. But on an iron with an iron condor, you're looking more at collecting 25 to 35% of max profit. So that's not a whole lot, maybe 30, $35 here or there. So I'm going to clear this one. But anyway, this is how I do my pre-market. This is new. Now, what they do come out with on Tuesdays is what's called, let's go with last Tuesday, cherry picks. Where are my cherry picks? Cherry picks. Come on, where are you? Oh, goodness. Not the cherry bomb. There it is. That's July, September. Let's just go here. Let's go with Dr. Data. That's who's sending the cherry picks. Mm-mm-mm. Oh, Dr. Date is also doing the Alpha Boost. There it is. That's the latest one because the next one I do believe is today. So here's the latest cherry picks. This is also where I do my research. So here you go. Tastytrade, Tastyworks has another new tool that you can use for free. But of course, you have to sign up with tastytrade.com, which is free, and the education on there is free. But it's called Look Back, and it's back testing by Tastytrade. So basically, there it is, live and open to anyone. All you need is a Tasty Trade account, not Tastyworks, the broker platform. But on this Tasty Trade account, you can actually watch Tom and Tony and all of their different streams for free. Everything is free. I just love this company. But anyway, it gives you can set up a trade that you've been thinking about, and you can get the forecast of what the profit and loss would be. You get a graphic of that. You get the back test what the data would be on certain um, positions that you were gonna take, but you didn't take. Like almost like paper trading, but better because you actually get to um, see in their data in their database 10 plus years of history. Hello, it's got advanced analysis of the trades that you're doing. So they're showing you how they're back testing. And here we go. This is I love these charts. I mean, this is just showing you what the market has done since 1990. And let's come over here to the last dot com bust boom, what the market did, and in what months the market did it, right? Here was the bust and boom for the dot com. Here's the bust and boom for down 29%. September year end move. There it is. There it is, folks. So a lot of great information, and then they kind of give you an overview of what the one standard deviation is on certain um, stocks relative to the movement of the market, and they just sort of pick a few stocks, and then the glossary. If you don't understand what IV is or IV rank is, option liquidity, we always correlate with the uh, S&P 500 or SPY actually on our platform. Um, and there you go. So even outside of that, of course, I'm going to let me drop this away and bring this down here, and let's go see what the Dow's doing real quick.
It is a good October, as you said, so we're not up against it, and typically we do wait until we are up against it. So this is putting the CR, which is the September 30th deadline, along with the debt limit. So it's not necessary to do it now. Second, Becky, let's face it, this is all about debt that has been accumulated since August 1st because we had a debt limit increase until that point. The vast majority of that is spending that Democrats have insisted on over the objections of Republicans. Remember the $1.9 trillion package that was passed in March. And now they're talking about 3.5 trillion, really probably closer to 5 trillion when you look at it honestly over 10 years, again without a single Republican vote. So the argument is really quite simple, which is that Democrats have the ability to do this on their own, just as they did the 1.9 trillion on their own, just as they're trying to do the 3.5 trillion dollars on their own, which is the biggest tax increase in 50 years. In addition to social spending, is probably the biggest social program since the New Deal. So that's what the argument is. I think it's a very logical argument. But the part that I like is that the debt limit actually forces us to make some of those fiscal decisions. In the previous segment, the comment was made about fiscal policy more broadly. I mean, you think about it, the only time we've actually reduced spending is in the context of debt limits. So that was how the sequester happened. That was how Graham-Rudman happened back in the day. So I do think, it's the opportunity to have that broader discussion about the fiscal crisis that we're facing as a country.
What do you think might get resolved? You kind of mentioned harken back to some days when there really were things that got done in a bipartisan manner. It's kind of hard to imagine that today in Washington.
Well, it would be a bipartisan agreement to deal with the spending going forward. So the CR that is being sent to us is just to continue the level of spending from last year. Probably has a few anomalies, as they call them, or exceptions to it, but that's really not the answer. That would be kicking the can down the road for another couple of weeks, probably, maybe into December at the most. But we're not dealing with the actual spending of the country. So the 12 appropriations bills. So we have to have an agreement on that, and that agreement ought to come along with the debt limit. We ought to be able to once again say, okay, let's put some caps on spending here, given the fact that we're approaching a $30 trillion debt in our country, given the fact that this year's deficit again is going to be near record levels. So, and given the fact that Democrats want to spend another $3.5 trillion in that context, despite the fact that the economy is picking up on its own, and if anything, the biggest concern in our economy today is inflation, as you guys talk about constantly. And the 3.5 trillion is just going to exacerbate that inflation, make it even worse. So I think it's time for discussion, and debt limit tends to be the place where that discussion happens.
Senator, the infrastructure bill and then the $3.5 trillion bill are still linked with some people, with Speaker Pelosi and others. At least that's the way they talk. And yet you've got Senators Manchin and Sinema. Manchin actually said, let's postpone it. Let's have a pause till next year. So I'm just wondering what the actual body language posturing is in your view. Now, let me just ask you, do you think that we actually do finally get just the infrastructure bill and that no human infrastructure gets done in 2021? Or do you think Manchin finally says, okay, let's do 2.5 and then we'll get that done and we'll get the infrastructure? Do you see a standalone, your bill, do you see a do you see a standalone infrastructure bill getting done if no other bill is done?
Joe, that would be what's best for the country. There's no question about it. I mentioned inflation earlier. The infrastructure bill is long-term capital expenditure spending. So, right, realistically, it's very possible. I mean, it's not in our hands, as you know, because the Democrats have chosen to do it with Democrat votes only. They put, and it's not just it's other moderates in the Senate, Democrats, and also a number of moderates in the House. And the Speaker has something like a 4-vote majority. And she's got about 10 moderates who don't like the direction they're going. So I think they're going to have trouble doing it.
All right. Well, there it is. The Dow implied open now
really hurts
is
our competitiveness, hurts American workers.
Is actually coming back. Earlier, it was up around 300 or so, but now it's up around what 190, almost 200 for the futures. And um, let's see what else. Nasdaq 94, almost 95, and the S&P 28. There it is, right there. 28 to 220 and 111. These are probably 1/3 of the numbers up that we were actually down from yesterday. So let's see what the market entails. Let's see what it holds for us today. And let's come out of here. Let's stop the screen. Well, let's say we actually do see a bounce for the rest of this week. If you see profits, take them. I would not buy the dip. I would not pair anything to go down. If I miss it, I miss it. I'm not YOLOing. I'm not FOMOing. I'm not doing any of that lawn mowing. I am lawn mowing. I'm paring back. Um, I will pull the truck up like your boys Kramer and his people do when they back up the truck. But this train is going to keep moving, and I'll keep watching the market. Keep watching the market. Stay focused on what's happening. Uh, Today is a pretty light day, but tomorrow it's going to be pretty crazy, with Powell. We'll see if he tapers. I doubt it. Uh, let's see if he talks about transitory inflation. He will, but at the same time, he'll be tripping. Now, I do believe that that's going to be a live conference, but it'll probably more than likely be one of those sickening Zoom calls where they got a bazillion people on. The audio quality is horrible. Things, technical things happen when you got a whole bunch of people on a call, be it Zoom, Teams, whatever, and it just anyway. So stay loose, stay light, stay tight with your money, and trade smart, trade often. I'm Susan D, and don't forget down below. This isn't financial advice. I'm just kind of showing you what you can do in the market as far as research, the software, the information. It's all free. And I'll also attach um, the link to the Tastyworks brokerage platform in case you want to give that a try. And I do believe if you open an account with $200, they give you $20 worth of Bitcoin. If you open it up with 2,000, which is a um, small account, small trading account, a good place to start. I do believe they give you $200 worth of Bitcoin or 10 option contracts or some stocks. I can't remember, but I'll get back to you with that. Maybe I'll just put it in the description. So anyway, yeah, and then I'll give you a link if you don't know tastytrade.com. You should really get in there and get your free information. Stop paying for information. Okay, it's just not worth it. All right, it's me, it's Susan D. I'm out. Gotta go, guys. Get me ready for the market.